All right, what's going on, guys?
What's going on, guys? How's everybody doing? How we all doing today? Hope you guys are doing good. Let's give it a couple minutes here before we get started. I know not a lot of you are going to have joined us live, so we will be having a full course of this soon, but stick around till the end of the live. We'll be doing a giveaway for everybody here, as well as answering all your guys' questions, everything that you guys need to know about futures live. But again, if you're not able to make it, maybe you're watching this later. Hopefully you guys are able to grasp all the information. We will be going A to Z on everything futures. So we'll get started here in about 30 seconds or so, all right? Let's just post this a couple places. Real quick. It is hot as balls in here. All right. There we go. All right, guys, we're good to go. So, all right. So, how many of you guys? Let's do a quick little poll in here. One sec. Let's do a quick little poll here, guys. Have you traded futures before? Yes or no? Let me know, guys. Take a quick vote while we wait for everybody to hop in here. Take a quick little vote. Bum, 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 bum. All right, so about 60% of you guys have done it, 40% haven't or so. So we're going to get right into it, all right? We're going to go over basically what futures are. We're going to go over how to trade them, different ones to trade. We're going to go over prop firms, and then we're going to do a little Q&A, okay? So first of all, guys, what are futures? What are futures? Basically, futures are much different than trading stock or options, right? And I think if we start with what everyone's probably used to, which is stocks and options, right? It makes it a little bit easier. So let's just break it down for you guys here, okay? So first off, we have stocks, right? Stocks, you can buy them at a specific price. If you guys have any questions while I'm doing this, feel free to ask them. I will answer them live. Stocks, you can buy at a specific price, right? You have no obligations. You can hold them forever, right? That's pretty much the basics of it. You guys know how it works. You can long or short. There's no obligations. And again, you can hold them forever, DCA as you want. There's nothing to worry about in terms of expirations, etc., right? Then when we get into options, right, there's multiple different ways. So when you get into options now, make it red, right? Options, you're going to be buying a contract with an obligation at a specific price, right? So if you buy a call, for instance, if you're buying a $100 call, that's an obligation to buy 100 shares at $100. If it's a $50 call, that's an obligation to buy 100 shares at $50 by a certain date, okay? So by that expiration date. Now, you can sell it before then, but if you let it expire, if you let it hold till the expiration date, 4 p.m. Eastern at the close, you are bound to buy those 100 shares unless your broker closes it on you, right? So, that's going to be on yourself, whether you're going to sell or hold. And if you hold it, usually you're going to need some type of larger amount of capital because you're buying 100 shares, right? And you can trade them with a cash or margin account. Margin account allows you to go in and out a little bit. Cash, you have to wait for the cash to settle for the next day, right? Lastly, we have futures. Now, futures, guys, move this over. Need to make this a little smaller, make it 32. 32. There we go. All right, now futures, guys, going to be a bit different, okay? Now, futures are similar to stocks. You're buying them at a specific price, and technically you're buying options at a specific price too, right? But it's not exactly based on the equity, right? You're basing it on the actual option itself, right? The bid and the ask of the option, whatever it is. Now, futures are bought at a specific price. They're perpetual contracts. We'll go over that in a second. They require X amount of capital per commodity or indices. So there's multiple different ones to trade, right? There's different tickers for each one. We'll go over that. And the hours of futures are different than the stock market. So futures open at Sunday, 6 p.m. Eastern, okay? And they're open the entire week until Friday at 5 p.m. Eastern with just breaks between 5 and 6 p.m., okay? So there's only a 1 hour break each day, and that's between 5 to 6 p.m. And then from Friday until Sunday at 6 p.m. So basically you get a 2-day rest period, okay? So futures do open here in about 6.5 hours, and they are, going all night. And the point of futures are to be able to basically, work the same way as the indices, right? You have things like NASDAQ and S&P 500, right? And usually you guys are probably used to trading SPY or QQQ. So here you're trading NQ and ES, and we'll go over what all that means, everything in a second. But basically you're able to see how the market moves overnight as well, because keep in mind, guys, at like 9:30 p.m., that's usually when the Chinese markets are moving. China Open happens, so there's global events happening at all times. So futures are able to move that way. Hedge funds and big money are able to move their positions or allocate certain capital or get out of certain things or short certain things based on global events. Okay, so things like the Chinese markets. 3 a.m. is the London Open. So there's many different things to watch overnight. Okay, so we're gonna go over that now. Futures they are perpetual contracts, which means they're constantly running. You can enter at a certain price, something similar as Forex, or if you traded Bitcoin futures, or if you traded pairs on Bitcoin before as well. Bitcoin to Ripple or Bitcoin ETH, etc., or ETH USD. If you trade on leverage, the only difference is that with futures, you are going to have different contracts. So those are going to be like the quarterly contracts, March, June, somebody just said it actually here. Yeah. So March, June, September, December. And the reason for that is basically so that you can't just hold it forever. You can't really hold these contracts forever. For instance, I can't just put a bunch of money in, buy in at a certain price and hold it forever going up. Okay. There has to be some type of cost for me holding something that is perpetual, okay? And when you're trading on margin, right, these are always going to be margin, the amount for that varies. So basically what this means is, and again, this might be all a little bit rocket science right now. We're going to get into what it means a little bit when we switch over to Tradevate in a second. But basically, when you're trading things like NQ or ES, that's going to be the S&P. NQ will be the NASDAQ. They have a letter at the end of them. So let's take a look at that real quick. So we'll take a look. Right now we're on the H contract, right? So H, this is demo paper just to show you guys everything. And the charts work the same. At the end of the day, anything you guys trade is the same, right? A chart is a chart. You can trade Bitcoin, you can trade futures, options are a little bit different because you have to think of other factors, right? But stock, futures, and crypto, all going to be trading the same thing, right? You're looking at a chart, you're buying in a certain price, you're using price analysis to enter and exit. What I was mentioning to you guys is this NQH. So forgive me, I will say the one thing I don't remember is the letters, but I believe it is, and I could probably find them real quick to remember what it is. Yeah, so it's H, M, U, and Z, okay? So basically what this means is this. So NQM. So when we get towards March, guys, we will no longer be trading NQH, okay? Right now, everybody is trading NQH, and that's the quarterly contract. So it works a little bit similar to options. The only thing is you can hold it into that expiration, but people will roll into the next contract. Now, when you roll into the next contract, guys, the price actually does jump a certain amount of points. Now, the reason for that is because if you were just to buy in today and just hold for like 4 years, you'd essentially always be up, right? You'd always be able to have infinite money pretty much coming into the upside, unless you have a drawdown from the period that you entered. So for instance, if you entered at $100, right, or let's just say $1,000, and it just kept going up, 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 it would be the same thing as holding like stock, right? But this works with margins. So the difference is that these contracts are quarterly. All that means is you basically have to sell come time around March and roll into this next contract here, this M contract. So that will last until September. You will last until December, and then you trade this contract here. Okay, so that's basically what you're looking at when you're coming into futures. So you're not really going to be holding these as much. I mean, some people do. They roll them and then just buy the next contract and they keep holding. But most people will be day trading these futures or, swing trading a couple days. Not many people hold them weeks to weeks at a time unless you're going to have major capital, such as a fund, etc. So how do they work? Now, when you're buying in futures, remember what we said, you're buying them at a specific price and you need X amount of capital per commodity or indice, right? So I'm going to just show you guys, Trade of 8 has the lowest margins, okay? I'm going to show you guys what this means. So we're just going to look at the basics. We're going to go to E-mini, which is the basic ones. We'll go over something like oil in a second, but when you're trading things like ES, right, this is SPY, NQ, right, is the NASDAQ, which is QQQ, RTY, IWM, right, and YM is the Dow, DJI, okay? So those are the ticker names, when you're trading stock to compare them to. Now, what does this mean? What is this day and initial? What is this shit? Who knows? Basically, what it means is in order to trade one contract of ES, right, you're going to need to be able to have $500 in your account, okay? You need to have $500 in your account, guys, during the intraday. Now, the day means that from all the time that the futures market is open. So this applies to what, guys? This applies from 6 p.m., right, till 5 p.m. the next day, okay? That 1 hour break, we would switch over to this amount, and we'll go over what that means in a second. But essentially, if you have $2,000, right, you'd be able to trade 4 contracts of ES. Now, you're probably thinking, okay, what if it starts to go down and I lose money? Doesn't that go below 2,000? Once you start to get towards every broker has different rules for liquidating your position. You'll start to get notifications. For instance, if this dipped down to like $1,500 or like $1,400, they'll say, hey, you're starting to, you've already dipped below the margin requirements here. You will be liquidated soon if it goes further. So they won't ever let you hold it down to 0. And we'll go over what that means too. But if you want to trade something like NQ, which moves much quicker, and we'll go into that, it is $1,000 per contract. Okay. Now, this initial basically means that if you want to hold it, guys, overnight, right? If you want to hold something overnight, you need this much capital for it. Now, you might be thinking, why the hell would I need that? Well, guys, think about it. If you're in a position, right, from Friday until Sunday, there's a lot that can happen in 2 days in the world, right? During COVID, things would drop 2-3%, right? Overnight, there's multiple different things that can happen in the world. There's a lot of money that you can gain or lose. So the broker needs to back themselves up, right? They need to make sure that you have that capital in case something happens overnight, catastrophic or major to the upside if you're short, to be able to cover those losses. So let's go over basically what that means, okay? So when we're trading NQ, guys, there's a couple of things. First of all, there's some different contracts that we can trade, right? ES is the S&P. Now, instead of what you guys are used to where things move in increments of 1 penny, right? So something goes up from $100 to 100.01, 0.02, 3, 4, 5, 6, etc., etc. ES, or the S&P, when we're looking at it right here, right? You can see here. Okay, how does it move? In increments of 0.25 at a time. So what does that mean? And you can see it on the side here, right? 50, 41, 50, 41, 25, 50, 75, 2. Okay. Now, basically what that means, guys, is a tick. Those are 1 tick increments. So whenever something moves up, right, instead of 1 penny on ES, it is 0.25, a quarter. Okay. Now, whenever anybody talks about a point, they just mean $1. Okay. A point is $1 across the board on every single thing. So in the S&P on ES, 1 point is 4 ticks, right? Quarter, 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 right? Same thing with the NQ, okay, the NASDAQ. Now the Russell, you can see up here, make this a little bigger for a sec. I'm going to just click it right now. You can see here, this has 2019.1, right? We don't see 0.25. So what does that mean? This has 10 ticks, guys. So the Russell moves in increments of 0.1 rather than 0.25. So it's almost like stock, right? Except 1 decimal place over. So in this case, 10 ticks are 1 point. So it moves in increments of 10 cents essentially, and 10 ticks equal 1 point. I don't know why I didn't do the Dow and oil and everything, but when you look at oil, for instance, you know, oil moves the same thing. You can see here, CL. Oil moves the same exact thing as stock, okay? It's going to be in increments of 1 penny. However, each one has a different value assigned to it. So let's go back here. Oh, let's go back here. So CL, for instance, 1 tick equals 0.01, okay? Equal, and then 100 ticks equal 1 point. Okay. Now, the difference is, guys, from all of these, that there's 2 different ways to actually trade these. So there's minis and micros. Okay. Now, when you're looking at things, if I'm just trading strictly NQ, let's just say I'm trading strictly NQ, and this is something I bought, you know, I don't know, a few days ago or whatever, whenever I bought it. Let me show you guys here. So everybody can see this, right? Right here. Let me try to zoom in. All right, so I'm zoomed in here. I purchased this contract of NQ at 17,891.25, okay? Now, I told you guys that these move up in increments of 25 cents a quarter, right? Each move is $5 for NQ, okay? So if it's $5 a tick for NQ, how much is it per point, guys? $1 is 1 point, right? 91.25 to 92.25 is $20. So it's $20 a point, okay? Now, if you switch over to ES, right? When you switch over to ES, I don't think I can show you guys live on here, but when you switch over to ES, each tick here, right? Each tick is $12.50 a tick. Okay, so when we go back over to here, what are we looking at, guys? We're basically saying that 1 tick equals $12.50 on ES, right? And 1 tick equals $5 on NQ, right? So let me just put on ES. Right? So you'll see there's different tick values associated with each. And you can see that when you actually go here, right? So for instance, if I click ES, it'll tell me how much is it per point, right? Because if it's $12.50 per tick, you can see here, $12.50 per tick times 4. There's 4 ticks in a point for ES, right? It's $50 per point. But when we go over to something like CL, crude oil, it's $10 a tick. It's the same... I don't know why I just said it's the same. Nothing's the same. 0.01, every penny, every tick is $10, right? But it's a different value per point because there's 100 ticks, right? In a point, right? There's 100 ticks. That's 100 times 10. It is going to be what? 1,000 per point, guys, right? So you can see that there's different values associated with each individual ticker, okay? CL is just like trading a normal stock in terms of the price, but every dollar is $1,000, guys. It is not $10. It is not $1, right? If it goes from 82 to 83, it is not a $1 increase if you're holding it, right? It's a $1 increase on the actual equity, right? Or commodity, excuse me. But the value that it goes up is $1,000, okay? So when I go over to here, if I'm going over to NQ again, keep in mind, guys, I've been holding this, a few days now. It's already up to 18,038, right? So I'm up 29.40 on this position, just at the current price it's at. Now, futures are closed right now. If this was moving live, you would see this fluctuate and be, pretty crazy. But guys, if this did go down, if this did go down, I probably should have scrolled differently, but whatever. Every tick down, I'd have a $5 loss. I'd be at a loss. Now, guys, the thing with futures is that it can go infinitely, right? I can go all the way down. Okay, I can go, technically this could go all the way down to 0. Would that ever happen? No, right? There's no way that the market would go from 18K and drop 50, 70, 80, 90%, right? We're not going to be looking at going to 2000 or anything like that, right? On the actual indice. But you guys can see these are the numbers I would be at. So for instance, I have 15K in this account, guys, right? So I technically be able to hold this one contract until what? Until I was at a major loss, right? What would that loss number be? Well, remember, if we go back, in order to hold one contract, I need $1,000 in here, right? If I want to hold it overnight, how much do I need, guys? Initial that, 19,470, okay? So the only reason, right, that I was able to, and these tend to fluctuate a little bit, right? The margin requirements for the night, I don't know if they're changing them, or usually they have them. Usually they have them here. I think it's usually around 16K to hold. And the overnight margin requirements, they do vary a little bit, guys. It depends on what's going on in the market. You'll see brokers start to change them. Like right now, it says the night session they don't have an amount. But essentially, if I wanted to actually hold this during the day, right, I would need $1,000. So I can technically hold this infinitely until what? Until I drip down below $1,000. Now, when would I drip down below $1,000, guys? Not for a while, right? I would not drop down for a while, because what would that mean? I would need to be losing $14,000, right? So $14,000, right? If we did some quick maths on that, right? Let's just if I pull up a quick calculator, I'm just going to do here. It's $14,000, right? How many dollars is a point? $20 on NQ, right? We would need to drop 700 points, okay? Now, is that possible? Yeah. Why is that possible? Well, guys, keep in mind, 18,000, we were just at, if you look at the charts here, right? Take a look, guys, real quick. Right now, we're sitting at about 18,000, but we were just at around 17,000, right? A little less than a month ago, right? We were just here. So we moved up 1,000 points. So that is going to be that $14,000. So for instance, guys, if I held one contract, right, of futures from a month ago and just held it, never sold, never did anything, I'm up $14,000, right? Now, that's only if I did not ever get stopped out, if I held it overnight, etc. So I would need the margin to do so, right? But you can see the potential of futures, okay? That is just strictly holding it. Now, keep in mind, these do move insanely fast, right, guys? Here's some news right here, right? I want to show you guys something. Price is at, you can see here, 17,900 on this candle, okay? In this 15-minute period, it went all the way up to 40. Now, guys, that is 40 points. Remember, on NQ, what are we looking at? How do I got to zoom in. I always do this where when I move everything, it always gets all fucked up. And I don't know how to do it. Okay, there we go. There we go. Okay, sorry guys, sorry. Okay, so what do we have here, right? We have NQ, right, is $5 a tick, right? So it is what? $20 per point, right? $20 per point. So if this went up 40 points, right? How much is that, guys? 40 times 20, $800, right? So just in this 15 minutes, I made $800. If I had $1,000 and I sniped this entry here with no drawdown, guys, and bought one contract, I just made 80% of my account in 15 minutes, just holding to the upside here. Now, is that a safe way to trade? No, right? Because inversely, it could have gone down. So, guys, there is something called micros. So let me go over that with you guys. You can see here. Look, guys, this is the same thing, right? It says MNQ. It's the same thing. There's just an M in front of it. So this is called a mini. This is called a micro, okay? So a micro is the exact same thing as whatever it comes after it, except it is divided by 10, okay? So what does that mean, guys? $5 a tick is now what? Look here, 287.50, 287, 286.50, 50 cents a tick. Now, what does that mean? 10 micros, right? 10 micros equals 1 regular contract of NQ. Okay, so 10 MNQ equals 1 NQ. Now, you might be saying, why would I want to do that? Well, guys, guess what? The margin requirements are going to be the same thing, guys. Look. Whoops. It's going to be MNQ. Right? The margin requirements are much less, right? So you're looking at, instead of $1,000, you only need $100, right? So every tick that you have is now 50 cents and the per point is $2, right? So if I go from 8 to 9, right, I made 88 to 90, $2 more profit, right? So I'm in this from right around the same price, I think. Right, so I started here. I got in at 8.94. Every tick up is 25 cents. Excuse me, 50 cents. Every tick is 25 cents, right? But profit-wise, it is 50 cents, okay? If I bought 2 of these, it would be $1, 3, 150 each, etc. Benefit of that is so you guys can trim on the way, right? It's like having multiple contracts at once when you're trading options, or if you're trading stock, being able to trim the position. So if you bought only 1 NQ, it would kind of suck, right? If you, for instance, on this period from 900 to 940, let's say you wanted to take profit here at 920, not a bad decision, right? Maybe this previous level rejects here. Who knows what it looks like on the smaller time frame. So we're not going to get into it right away. But what you'd be able to do is trim half of your position. So if you bought 10 MNQ at 900 down here, right? If you trim 10 here, you could lock in that profit, and then you'd be riding the rest of the 10 here, okay? Does anyone have any questions on that? Micros, minis, NQ, tick values, etc. Does anyone have any questions on that? Here's the month codes too. Anybody? Very clear. Cool. Awesome. Making sure you guys get that. So, what are some trading strategies that you can do for this? Well, there's different types of ones. You can do the same thing as you guys trade, on the chart, right? You can do the same exact thing that you got. Yes, there are fees. There are fees are here. You can see here, per contract. Mostly what you're looking at with fees, to be honest, is 1 tick. Everything is 1 tick. That's how much it costs. And that's pretty much nothing. 1 tick covers your fees. With NQ, it's even less than 1 tick. Okay? Micros is 1 tick. All right, so let's go over some strategies. So if we wanted to trade, let's just say we're trading on the 5-minute chart here. Let's say that we wanted to trade here. Let's look at this, okay? Okay, here's a perfect example right here. This reversal. This is at 4 in the morning. Again, this can be any time, any place, whatever, any type of deal, right, that you want to do. Any type of chart, right? We're going to take a look at this and say, okay, here, I'm going to take off this indicator for right now, no volume. This was a previous level, right? A previous resistance right here, this zone right here. All right, we had a huge period of consolidation, and then we broke up. Now we finally came down to retest this level, okay, guys? We retested it, and on the 5-minute, we put in a reversal candle here, right? We put in a reversal candle here. It's very easy to spot, very easy to probably take a position because it lines up with what? A previous zone that we had drawn out. A lot of volume as well, guys, right? When there's a lot of volume on a candle that has a relatively flat close or a doji like this, right? When you have a wick to the upside, wick to the downside, right? This means that there was a big battle, okay? Now, when there's a big battle at a certain level, guys, what is the best R to R to take? Well, it depends what side of the zone you are on. Remember, we broke up above that zone above here. So now we are retesting it on the other side, which means we're looking for a move back up here. Okay. So if we're looking for the move back up here, right, what do we want to do? We want to take a long. So once this candle closes, we can take a long. Okay. Now, is this a trade that's going to be 100% accurate? Always no, right? So what can we do to minimize our loss? We put a stop loss, right? We're going to put, remember, we're entering right here on the body. We're putting a stop loss right below the wick, guys. So what is that? That is, we entered here at what? 89.25, right? I can't really show it. Let me see. Or 89, right? We entered here at 89, okay, right at this green line, this orange line you can see here, right? And our stop loss is here at what? 84, right? So what are we risking, guys? Right here, 5 points. How much is 5 points, guys? How much is 5 points on NQ? What do we remember? Come on, chat. How much is 5 points? 20 bucks, right? 20 bucks times 100. I mean, times 5. 100, right? So we're looking at $100 here. I said 20 bucks. So that was the first thing someone said in the chat. I was like, 20. It's like, damn. 100 bucks, right? So 5 points times 20 bucks. Okay, so that's 100 bucks. Now, our target on this trade could be what? Back to the high of this previous candle? Sure, that would work out, right? That would be 14.25 points, right? So what are we looking at that point? If we're looking at 14, right? 14 points alone is what? 280 bucks, okay? Plus that extra 5, we're looking at 285 bucks, okay? Now, if we rode this back to the previous high, right, which it ended up hitting about 33 points, guys, right? So 33 points here. We're looking at what? $660 profit. So our risk on this trade is what? $100, right? And we're looking to make here $280 or even $600 plus, okay? And you can continuously raise the stop, you know, as it goes up, of course, etc. And you would have never, pretty much gotten stopped out of this trade until this candle here, right? If you wanted to keep running it up. But you would be able to trim along the way if you were doing something like micros or if you bought multiple contracts. Now, guys, if you bought we're not going to go over, analysis here. I'm not going over trading itself here, guys. This is strictly about teaching futures. I have plenty of other videos on my channel. Go ahead and look at them, going over how to actually analyze the charts. I'm just going over simply how to trade futures and how they work. So I know somebody was like, would you wait until this candle close, etc.? None of that is being discussed right now. In this case, though, I will say, there's just a hard stop loss below here. So if it goes below here, I'm out. That's it. And basically what you'd be able to do is put your stop loss there, right? So you just always can set your stop loss and then trim wherever you see fit, okay? Raise the stop loss up or down. It's very simple to do, right? I can put my stop loss. I can't do it because it's not open. Market's not open right now, sadly. So it doesn't let me do it right now, but I could basically put a stop loss here, or I could place a sell order here, etc., etc. So it works the same way as that, okay? So if I was in NQ right now and I had 2 contracts, guys, I'd be risking $200 to make what? Anywhere from 560, that 280 times 2, or even 600 times 2, right? 1,200 bucks. So it's a very good risk to reward trade here, right? It's always going to be beneficial for me to take this trade, right? 6.6 R to R here, even if we took profit back up here where we said before, right? 2.35 R trade. Okay. Now, me personally, I will tell you this. I personally don't usually set almost anything. I don't use stops. I don't use TPs preset usually until I'm in the trade, okay? So I don't use brackets, to be honest. I don't even set stops for the most part. And that's because I am watching levels. I will say, I told you guys it wouldn't be a trading lesson, but, if this started to dwindle down here, I might not hard stop right here, but I might watch the price sweep below here before it goes up, right? Now, that's personally how I trade. That's only because I'm not using a lot of risk each time, right? I know what my my risk appetite is compared to my overall size of accounts, or compared to what I'm using overall in a prop firm, et cetera, et cetera. If you guys want to learn more about that, every Monday through Friday, I do a live stream at 9:15 a.m. trading futures. So you can tune into that to see how I trade it. But if you're starting out, I highly suggest you always set your stop loss first, just so you don't get blown out in case something happens, okay? When you learn how to manage your risk better, then you can use what's called a mental stop loss, which is when you place the order yourself. Jay knows what's up, exactly. Anyway, so you can move. I do move my stop loss up when I'm in profit, usually for the most part. Keep going up as this trade goes up, and eventually you get stopped. But that's how that works. So you can do that when you go on Trade-Evade. I have a Trade-Evade guide that goes over how brackets work. I'm not going to go over exactly trading on Trade-Evade, how to use this platform. I have another video. It says how to use Trade-Evade. I think it's in the description below, so you guys can check that out if you want to learn that. So that's that, guys. That's basically the overall of futures. Anyone have any questions on futures? And we're going to go over really quick prop firms in a second here, but I wanted to make sure that you guys... Oh, wow, they updated the site. Oh, shit. Well, that's nice. Any questions on that, guys? What about a new trader? Would be able to understand if I watched live every morning? If you watch this video, you watch the other two videos below, and you just spend a whole day, maybe 8 hours, 7 hours, watching all my best videos with the top videos on my page, you'll understand every single thing I'm doing each day, pretty much. Gonna do a live trading futures tonight? No, today's the Super Bowl, having a party at my house. So how do I get a second Apex account? Yeah, so if you want a second account, you just log in and sign up, buddy. You just do the same thing you did. You log in, and you just click on the left, and you hit Trade-Evade and sign up. That's it. You just go, you log in. I'll show you real quick. You log in, you click Trade-Evade right here, and then you just hit sign up, and you just do it again. That's it. That's all you do. Answer a couple more questions real quick. Whoops. Where did the chat go? I lost it. Lost the chat. Lost the chat. All right. Is it best to trade during regular market hours, even though it's open longer? It's a good question. So, regular market hours, the market does move crazy. So that's a very good question. I completely forgot to discuss that. Thank you for that. So, guys, here is the market open right here, 9:30. Look at these candles. Right, from 8:30 when data comes out, right, from here to here. To, where is it? 6 p.m. Here. So look at this range, guys. You can see huge amount of volume. Look at all this volume down here, right? This is the overnight session, guys. Overnight, right? And overnight is from here. All right, you can see the volume dies down after 4 p.m. to here, right? Much safer and much easier to trade overnight. However, you are privy to a lot of news. So you might have a great analysis, but then China data comes out at 9 p.m. or 3 a.m. London, the London Open. So you can see here, look at 3 a.m. Exactly what I said, right? 3 a.m. Eastern. You can see there was a huge move up. That's because the London market opened and it pushed up high, right? So the London Stock Exchange opened. So you just have to understand there's multiple times to do it. And you need to have them. How can I get the volume profile? It's just right here, man. Visible range volume profile. Reasons futures over options, much easier. You don't have to worry about dates, expirations, and all that shit. You can just simply hold with price analysis. That's it. You don't have to, if I enter here and the price goes down like this for 3 hours, when you come back up here, on options, you're still down because of time decay, right? There's no time decay, so I'm still in profit, anything above there. If you hit the private target in the first day, do you have to trade 6 more days? Yes, just open and close a micro. Hey brother, can we turn down the frequency of the ads, please? I just put it on. I just had it on normal. I don't know what it was. I apologize if you guys had ads. Really apologize. I just I didn't pick the amount. I put it. It's on like YouTube automatically. I'll make sure to turn those off. If you strictly use your own capital, what platform do you recommend? I still recommend Trade-Evate #1 for sure. So let's go over what Apex is, guys. So Apex Trader Funding, okay? Apex Trader Funding is basically going to be a site, guys. And I'm going to post a link in there if you guys want to copy that or use it. Have no ads as a subscriber. Oh, there you go. That's weird. Anyway, Apex Trader is basically where you can take a demo account, guys. Essentially what you can do is this. I'm going to go over Trade-Evate here. You can get 50K to trade. You have to try to make $3,000 here, right, without losing 2,500, okay? And now that is a trailing drawdown. And I have a video that kind of goes over all this. I'm not going to go over it fully with you guys, okay? But you can get 80% off here, this 187, using the code that I posted in the chat, as well as the link below in the description. Same thing, okay, guys? So instead of paying that 187 here, you're only looking at paying $37 to get funded 50K. Now, it is not an easy feat, guys. I'm telling you, it's not something that's super easy. However, rather than putting hundreds to thousands of dollars in an account, it's better to just try to either paper trade. You can do this on Trade-Evate for free. You can make a Trade-Evate account and open an account there and trade for free on a demo account, right? Get used to it. And then go over to here and pay $37 for a 50K account to try and pass. Now, when you are funded, you can actually get live money that you are able to withdraw. Now, again, I'm not going to go over the full thing on that. Don't just sign up. I want you guys to watch the link below in the description, or just go on my page and type in "what is Apex Brett Simba" on YouTube. You guys will understand that, okay? You can purchase, yes, you can have multiple accounts. So for instance, guys, I can buy up to 20 of these accounts. So I could have up to $1 million in funding, and I can actually copy trade them together. So for instance, on this one account here, this 50K, if I buy one contract of NQ, I can make it so the other 9 copy that. So I'm always going in 10 at the same time. Now it is still 1, right? But I'm buying multiple at a time on multiple accounts. And you'll see why the reason to do that is when you go watch the other video I have. Best way to draw the fib. It's hard to do it when it comes to lower time frames. Thanks for your content. Best in the biz. Appreciate you, Daniel. I have a fib course. It is free. It's on WAP. You can just type in "Saying Stocks" on WAP. It's also on my Twitter. All right, guys, any other questions? That's pretty much it, guys. That's every single thing. I want you guys to understand. Click the link in the description below if you want to learn more about Apex. Use the code. You'll get 80% off any of these plans. That's it, guys, for futures. We only spent about 45 minutes here. That's literally A to Z. It's not as hard as you think. The best way to do it is just by getting into it. I will say that the worst thing, the activation fees are still going to make you pay the same thing that you pay anywhere else. UPAC, there's nowhere else cheaper. And the best part of trading on Apex is if you fail, you didn't pay that full fee yet. On other prop firms, you're going to have to pay $200, $300 each time. You don't want to do that because why? When you pay that, what if you fail? You have to reset, etc. And I go over that in another video. Yeah, I know Andrew. I know Stock Market Wolf. He's the homie. Have you been able to get paid out? Yeah, multiple times. Basically, what you're looking at when you get a payout from Apex is you submit a withdrawal 1st and 15th of each month. Again, watch my other video for that. Not going out over levels in this video. This is not a technical video. Do you run out of buying power? Can you do infinite trades? You can do infinite trades. You cannot run out of buying power unless you run out of margin. I'm not doing any trading setups right now. What's a volume line indicator called on TradingView? It's just called visible range. So you can deposit your own cash into Trade-Evate. Yep, you can if you want. Himanshu, just watch my other video. Guys, I'm not going over Apex more in detail. Watch the video. I go A to Z on it. I just don't want to repeat myself on it. It's a great video. It's only a few minutes long. It goes over literally everything on it. It's great, guys. 90% of people fail. So 90% of people who take this will fail because they don't understand everything and everything that we just went over like this, right? So Doesn't really make sense when you think about it that way. But if you're understanding things and you practice first, then you're going to be good. We're doing a future late night review for the week. Not tonight, Super Bowl night. So UA Puck, yeah, whatever you want, man. The only problem I have with them is you can only have 3 accounts. I'd rather have 20 accounts. 20 accounts, you get paid out 20 accounts with Apex, get paid out $2K every 2 weeks, $40K, $80K every month, right? Huge. I don't know what you're talking about, Christian. I'm not too sure which strat. Yeah. But all right, guys, I hope you guys enjoyed this. I will be doing a full course that basically breaks this down a little bit easier, has a little bit of slides and different things that make it easier, similar to my other course that I have for the fibs. If you guys want to check those out, you can do so as well by going to my page on WAP. Show you that real quick, right? If you go here, right, I have a Fibonacci course here. That gives you full access to my fib course. I'm going to have a similar course coming out for futures as well. So if you didn't understand this, I highly suggest you watch it another time, but that course will be coming out this week. Basically what that looks like is this. Let me show you guys real quick, right? So you're looking at this, opening video, what I cover, how to use retracements. This is my top trading strategy, by the way, and you guys can go over all this, how to use fib retracements, different things. You can find that on WAP as well. So I hope you guys enjoyed. I hope you guys learned a lot, and I hope you guys enjoy the Super Bowl. So talk to you guys. It's 80% now. Yeah, free humanity. They change it here and there. Appreciate it. Yeah, I got to change that in the description. Hope you guys enjoyed. Have a great Sunday. Enjoy the Super Bowl, guys. And I will see you guys for live trading 9:15 a.m. tomorrow. Later.